All right, let's talk about the Indian stock market. It's not just numbers and charts, it's an emotional roller coaster. Today, we're going to dive into how you can spot the difference between pure panic and wild euphoria. And more importantly, how you can keep your cool when it feels like everyone else is losing theirs. So here's the big question, right? How can you tell when the market is just completely losing it? When it's not driven by logic, but by pure, raw emotion? Let's break that down. To really get a handle on the market psychology, we've got to meet this character called Mr. Market. Think of him like a business partner you have. Some days he's banging on your door, absolutely ecstatic, offering to buy your shares for prices that are just insane. Then on other days, he's totally depressed, practically begging you to take his shares off his hands for pennies. The point is, he's emotional, he's unreliable, and he's the perfect metaphor for the stock market itself. So really, Mr. Market basically operates on two settings: extreme fear, which looks like panic and despair, and extreme greed, which is all about euphoria and overconfidence. Your job, your key to success, is just learning to recognize which mood he's in so you don't get swept up in it.
Okay, so let's start with his darker mood. How do you actually spot when Mr. Market is in the grip of total all-out fear? What does that really look like?
Well, the first sign is pretty hard to miss. Even fantastic companies, we're talking the ones with solid earnings, great futures, are getting absolutely hammered. Their stock prices get slashed by 40, 50, sometimes even 60%. This isn't just a little dip. It's a fire sale.
And here's the crucial part. This isn't about one company messing up or having a bad quarter. When Mr. Market is genuinely terrified, the selling is just everywhere. It doesn't matter if you're a blue chip giant or a tiny startup, everything is getting sold off. The good, the bad, it's all being thrown out together. You'll also see some really clear technical signs. Panic selling hits every single sector, from banking to tech to pharma. And for us here in India, you want to keep a close eye on the Nifty P ratio. That's just a way of measuring how expensive the market is. When that number drops way down into that 10 to 12 range, that's a huge signal that fear has pushed prices to rock bottom levels. Okay, now let's flip the coin. What happens when that fear turns into pure euphoria, when Mr. Market is just blinded by greed? Well, the signs are just as obvious, but honestly, they can be a lot more tempting to fall for. The red flags are everywhere, if you look. You've got companies with zero profits, sometimes not even any sales, that are suddenly worth billions. You hear about people quitting their day jobs to become full-time traders. And margin debt, that's the money people borrow to bet on stocks, it just hits record highs. This isn't investing anymore, right? This is a casino. And then you start to hear it. The four most dangerous words in all of investing. This time is different. As soon as people start saying that the old rules of valuation don't apply anymore, that's your cue to be very careful. It's basically the theme song for every single market bubble in history. So we can spot fear and we can spot greed, but so what? Why is this actually important? What's the real advantage for you as an individual investor? Here it is. This is the whole key. Your greatest advantage isn't some secret stock tip or complicated formula. It's simply your ability to stay rational. It's about seeing that Mr. Market is acting completely crazy and having the guts to do the opposite, to buy when everyone is panic selling and to be cautious when everyone else thinks they've found a money printing machine. So here's the super simple 3-step checklist you can use. First, just try to identify the market's mood. Are we in fear mode or greed mode? Second, check for the signs we just talked about. Are great companies on a massive discount? Is your cab driver giving you stock tips? And third, and this is the most important one, act based on your own rational thinking, not on the emotional reaction of the crowd. At the end of the day, Mr. Market is always going to swing between his manic highs and his depressive lows. That's just his nature. It's never going to change. The only thing you can actually control is how you respond to him. So the real question isn't what the market's going to do. It's what are you going to do?